The housing market crash has begun. Housing bubble pop. What exactly is a housing bubble? Before delving into the origins of housing bubbles and what causes them to burst, it is crucial first to comprehend what a housing bubble is. These usually start with a surge in home demand, despite a shortage in the housing market. Speculators enter the market, therefore, increasing demand and inflating the bubble as they buy investment houses and fixer-upper flips. Prices naturally rise when supply is low and demand is high. Housing bubbles affect the real estate business and homeowners' budgets. When circumstances go rough, consumers may be forced to find methods to keep up with their mortgage payments due to the influence a bubble can have on the economy, e.g., interest rates, lending standards, and securitization procedures. Some people may have to delve even deeper into their pockets, dipping into their savings and retirement accounts to maintain their houses, while others will declare bankruptcy and foreclose on their homes. What causes a housing bubble? Like the prices of any other item or service in a free market, housing prices are determined by supply and demand. Prices rise when demand rises and supply lowers. Prices rise when demand outpaces supply trends in the absence of a natural calamity that would reduce the immediate supply of dwellings. Because it takes a long time to build or fix up a house, and because there is no more land to build on in heavily populated regions, housing supply can be slow to respond to increases in demand. Prices will almost certainly rise if demand increases suddenly or over an extended period. Once it is established that a demand shock initially drives an above-average rise in housing prices, we must ask what the causes of that increase in demand are, and there are several possibilities that cause this. 1. An increase in overall economic activity and prosperity provides consumers with more discretionary money and encourages homeownership. There is a rise in the number of people entering the housing market or in the demographic portion of the population joining the housing market. 2. Low interest rates in general, especially short-term interest rates that make properties more inexpensive. 3. Mortgage options that are innovative or novel with low initial monthly payments make homes more affordable to new demographic groups. 4. Easy credit, often with more minor underwriting requirements, draws more purchasers to the market. Each of these factors can cause a housing market bubble to develop, and these factors tend to reinforce one another. However, it is important to remember that an increase in activity and prices, like all bubbles, preceded all market participants' excessive risk-taking and speculative behavior: buyers, borrowers, lenders, builders, and investors. How does a housing bubble burst? But before we continue, go ahead and click the subscribe and like buttons. It takes a lot to make these videos. Your small actions tell you to keep promoting our videos. Thanks. Now back to the video. When excessive risk-taking becomes prevalent across the housing sector and prices no longer reflect anything near to fundamentals, the bubble eventually bursts. This will occur while the housing supply rises in response to the previous demand surge. In other words, demand falls while supply rises, resulting in a rapid drop in prices as no one is left to pay for even more properties at even more excellent prices. Losses sustained by homeowners, mortgage lenders, and property investors have caused this understanding of risk throughout the system. A variety of factors might lead to those realizations, such as 1. People will continue to rent if mortgage rates are too high, as they will be unable to obtain a home loan. 2. When unemployment is high, American workers cannot purchase property since many lenders require a 6-month job history, at the very least, to accept a loan. Unemployment can also increase house sales and foreclosures, boosting the number of available homes. 3. An excess of houses on the market can stifle demand for new construction, hurting the property development and construction businesses even more. During the last major housing bubble in 2008, all of these factors came into play. Predatory lending practices meant that persons with bad credit and high debt-to-income ratios were approved for mortgages by banks and other lenders. They urged consumers to choose balloon mortgages, which have low initial payments but increase in the future. The housing bubble had a role in the Great Recession of 2008, which some individuals are only now beginning to recover from. According to the Washington Post, homeownership rates peaked at 69.2% in 2004. By 2016, the figure had fallen to 62.9%. Although the Great Recession occurred barely a decade ago, analysts are already talking about the next housing bubble. People are wondering if we are in a housing bubble that will soon burst. Will the current housing bubble actually burst? Experts do not believe America is on the verge of another housing crisis despite rising house demand. Even with new buildings commencing every month, the housing supply remains limited. In 2006, there were 1,823,000 monthly single-family home groundbreakings and 4.04 million existing homes for sale on the market, while there were only 1,130,000 monthly groundbreakings in 2021, with only 1.25 existing homes. The housing shortage, not false market optimism, is driving up the cost of homes. Furthermore, the pandemic reduced the availability of properties by causing potential sellers to postpone listing and moving. Because of the economic uncertainties, fewer people were willing to make significant financial adjustments. People were afraid of contracting the virus, so they avoided meeting with realtors, scheduling showings, and moving through with their plans. Demand soared when properties were taken off the market, increasing housing values even more. The pandemic also temporarily delayed new development in several areas, restricting the number of new homes available in 2020. In 2021, buyers are still striving to catch up, battling low supply to locate their dream houses. What should homebuyers do? Homebuyers are faced with harsh choices in today's housing market due to predictions indicating that home prices will continue to increase and that new home construction will continue to fall behind. This puts homebuyers in a tight situation for the future. Some buyers may relocate from big cities to more affordable ones, while others may stretch their budget to compromise with the situation at hand. On the other hand, buying a house now will make people sacrifice other purchases to save money if home prices continue to increase. According to David Dworkin, President and Chief Executive Officer of the National Housing Conference, failure to address the shortage in the housing market can result in the risk of adding more fire to the inflation rather than ending it. This could lead to stagflation, an event where both high inflation and slow economic growth happen. Experts say that prices in the housing market aren't likely to go down yet or return to normal for the next few months. Homebuyers and future homebuyers will have to patiently wait to buy their dream house or forever home in the meantime.